In this exciting episode, we get to know Sarah Bender, Builder Relationship Manager of Mortgage Sales at BECU Home Loans. Sarah takes us on a fascinating journey through her unconventional path into the world of construction lending, sharing personal stories from her early days in the mortgage industry to her current role leading BECU's custom construction lending program.
There are no dumb questions. It's the question that doesn't get asked that's the one that creates the problem. I call it success because we've grown 250% in the last 2 years. Not all loan officers have the ability to take kind of a complex process and make it a good experience. And I built my business on referrals, so it was important to me to do that well.
I'd like to welcome everybody to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Gorilla. Today we've got a great guest for you. We've got Sarah Bender, Builder Relationship Manager of Mortgage Sales at BECU Home Loans. Welcome to the podcast, Sarah.
Thank you so much. I'm excited to be here.
Yeah, no, we've gotten to talk quite a bit offline, from kids to credit unions to philosophy, quantum computing, little bit of everything in there.
We've covered lots of topics already, even before we started recording, so that's good.
Yeah. Now, one of the things that I really find fascinating is how you got into construction lending and what brought you here. And I think that may be just a good place to start with the podcast.
Yeah, it is. I think we as adults, we as kids, we grow up when we think we're going to be something, and then who knows how our path, our journey proceeds, what it takes us. I was first out of college, and I worked for a builder here in the local market, and come full circle, that builder is someone that some of our members have chosen to use to build their house, which is kind of crazy. But really, I started in the mortgage industry as a first time home buyer, right? If you ever bought in a house, you've been on the other side of the table, you had to learn what it was to get a mortgage. And we had an FHA loan, and I went back to our loan officer to ask if we could refinance. And he was like, the numbers don't work, but I will do one better for you. I will give you a job. So I was his processor.
Wow.
Yeah. So I processed some loans and did some work for him and realized, I could do what he does. So I asked the owner of the company, because it was just a small mortgage company at the time. This is like 2001, right? If he would let me do what the other guy was doing. He's like, yeah, sure, you can do that. Because there was really no testing or anything at that time. You just had to bring in business and do,
Yeah.
be able to do all the forms correctly, read a rate sheet, all those things. So I became a loan officer and got all of my business from referrals and made connections with real estate agents. Fast forward to the mortgage change. I like to call it the change because I hate saying meltdown because it didn't really melt down. There was a lot of change. It was a full time job just to keep up with all the changes, right? Underwriting guidelines, forms, the way we did business. It was a full time job keeping up with all the changes. And like I mentioned before our recording, I had 4 small children and I didn't really have to work. So I handed off my book of business to my business partner, and I was a full time mom. I did odd jobs in the middle. I was an education program manager for a nonprofit. I worked at the little private school my kids went to. I was the music teacher and PE teacher and athletic director. I've been a mountain bike coach. I still am a mountain bike coach. That's kind of my hobby on the side. And fast forward, we had our own financial meltdown in our personal life, and I had to go back to work, like earn big girl money is what I call it. So I came back to the mortgage industry, and my business partner, who I'd handed off all my business to, she's a top producer, and I went on her team. I came back on her team and worked with her and kind of did the same thing I did before. I was like, well, I can do what she's doing. So I, started doing my own thing and built my book of business. The company I was with, we did a lot of construction loans. So I was able to do that work, right? I think not all loan officers have the ability to take kind of a complex process and make it good for a consumer, a good experience. And I built my business on referrals. So it was important to me to do that well. So fast forward to some other personal things. I started looking for a different job. I didn't really want to be in production anymore. And I saw a job posting at BECU. I applied for it. And surprisingly, I got the interview. My boss, he loved my education experience. I thought that was going to be like my downfall, but it was something that was a strength because he wanted this role to be an educator. And there you go. Here I am.
And where does construction lending come back full circle into BECU?
So yeah, BECU, we um we've been in the mortgage arena here in the Northwest for a while. And we did do construction loans, but I think it went on pause for a couple of reasons. And so when our president of mortgage was like, hey, we need to bring this product back, this role, my role, was identified. We need to have that person. And then we need to have a key partner to make sure that we have a really good experience for our members and our builders because our reputation is really important to us. BECU has a great reputation in our communities as being helpful and good to work with. So we wanted to make sure that that still was true with this product. So enter Land Gorilla. There you go. You got it.
And then they go for, hey, well, who's going to do all this? Oh, Sarah, she's a great educator. She's done construction lending before.
Well, I think my boss had the insight. I mean, he's a super smart guy and he is really good at his job. If I were to vote for my favorite boss in all my working career, he would be at the top of the list.
So now we got to say his name. You just can't.
No, I can't. He would not want me to say his name.
Oh, I mean, the modesty is awesome.
He is very modest, but I think he identified that you kind of needed a Swiss Army knife kind of person in this job. So I think that's why he picked me because of my very diverse, right? I wasn't a sales manager before. I haven't worked in banking for 25 years. I had a pretty big resume with different things in it.
Let's take a step back and talk about BECU, what it stands for, who's the members you serve, and I think that may be a kind of a good starting point for our next segment here.
Yeah, it's funny. So I love credit unions. I had an experience as a early married person with a local credit union and how they helped us, right? So the credit union co-op, we're a co-op and we're owned by our members. And we are the largest community-based credit union. So it used to be that you had to work for Boeing to have a membership at BECU or someone in your family, but now you just have to live or work within our communities and you can have a BECU account.
Boeing Employees Credit Union.
Correct. Started by Boeing employees in the 30s.
In the 30s.
Uh-huh.
So you guys are getting ready for your centennial.
It's coming up. It's
coming up.
Uh-huh.
That's a big milestone. That's better than our 15 year. That's 100 years. That's amazing. That's amazing. Well, how's construction lending going at BECU?
We are really excited about the future. We definitely, it's easy to celebrate when you start from zero and then going from zero to something is exciting. I think that we've made strategic moves to make sure that our growth is sustainable and something that is meeting the expectations of our membership as well as our builders who are building our members' houses.
And how so it's starting from nothing. It sounds like, hey, we had it, we put it on pause for a few years, bringing it back. You're easing your way into it. Things are going good. How are you thinking about all this right now?
No, it's going great. It's funny because anytime we have a conversation with someone who's higher up than me, it's always, we are so excited. This is a good story to tell our executive team because of our success, I guess you could say. I call it success because we've grown 250% in the last 2 years.
The credit union in general or this
No,
program?
this product.
Well, that's a lot.
It is a lot.
Unless you're saying, hey, you started with two and you're multiplying it like, hey, we're doing six now. That's a little bit
Well,
different, but
I mean, the first year is, you have, yeah. So we had 1 year of benchmark. We more than doubled the second year. And then this next year, we're probably going to double that or one and a half. We'll call it one and a half.
well, why is it taking off? Without diving into all the economic factors, but what do you see? Why do you see your members lining up for this product?
I think there's multiple factors that come into play for a custom construction product. One, I know within our region, we have financial institutions that have pulled back from their portfolio lending, and their portfolio arm was their key construction lending arm. So we have some players that are no longer in the market. So you have that. You have a lot of. It's interesting because I just attended a economic forecast breakfast with one of our HBAs here,
Mhm.
and one of the main speaker, he was an economist. He had a really interesting slide about migration in the state of Washington. What counties are having people move to and from, and we are seeing that reflected in our custom construction product. So Spokane County, Stevens County, Eastern Washington, we are seeing a lot of building going on over on that part of the state. And that's reflected in migratory people moving in Washington from one place to the other.
Were you like, I think I've seen this slide before, but had a different title?
Exactly. I was like, I can prove that. Yep.
Now, what are your members thinking about this? I mean, there's one thing to offer a program, there's another thing to do it poorly, to do it great. Are you getting member feedback yet? Is it still a little early? Is it you seeing some referral business start to generate from it?
Yes, we definitely have seen all of those. I think that we use NPS scores, so Net Promoter Score, and we've seen really good Net Promoters NPS scores. We've also seen uh, referrals from, oh, my sister built a house last year and she said to come to BECU type thing. We also have seen builders referring their clients to BECU uh, because of, they're having success with being able to communicate with us during the draw phase, or um, they find the software easy to use. So I think that there's multiple factors to getting that kind of referral business, internally and externally. But yeah, for sure, we're seeing, even we have that Eastern Washington team, we've had some intake from loans that were at a different place that came to BECU because they heard that our rates and fees, our product was better. So
Wow, that's great.
loan switching. Yeah.
Yeah, no, that's great. Well, and you came into this with a pretty strong background in construction lending. It wasn't like this was just thrust upon you and
No.
hey, we're going to go to Sarah. Sarah, go figure this out. You kind of had some of the secret sauce already set aside. And when you think about, I like the term secret sauce. What do you think what do you think the important ingredients are for a successful program?
I think that making sure that if you have, so one on the front end, right? You have salespeople talking about this product to a consumer or a borrower, in our case, our members. And so it's really important for your sales team to have that confidence of knowing about how the product works, how to be able to speak to all of the members' questions or all of our borrowers' questions, because that helps create an expectation of how the process will go. And if you don't meet expectations, you know how well that goes, right? So
Rough.
it's rough. So if you don't have a good quality control kind of front end process, and in our case, we do that with education. So all of our salespeople have to go through a construction class, like how to do construction loans, how it works, how to put it together. And then we also do a quarterly connect with any of our updates that we do. So even like LG, you guys give us all of your software updates. Hey, this just came out. So if those impact something that's in their workflow, we give them those updates too. So we definitely make sure that they know what they're talking about and they can create really realistic expectations for our members if they go through the process.
Wow. And what would, kind of in contrast, what has been, do you have specific kind of examples that you reflect on of going like, hey, here's a point in time where we did not do that and it was a little rough, or was this something that you just kind of always knew out of the box would be an important part of the recipe?
I think, yeah, I think you have to take a step back. One, I always tell my construction people, they're my people, there are no dumb questions. It's the question that doesn't get asked that's the one that creates the problem. So I am always responding to teams. I have my cell phone number. So whenever there's a question like just today we had a question, about contingency. So someone told the borrower like you have to have in cash you know, if it's this scenario. I was like, no, it doesn't have to be in cash. If there's enough room on the LTV and we can put it in the loan, you don't have to put your contingency as cash. And I'm glad that she asked because that would have been the wrong information to our borrower if the question didn't get asked, right?
Well, one of the things that you kind of mentioned was rolling this out, and you guys are very methodical and plan oriented. Is there any specific recommendations or suggestions that you would give to say another credit union that was planning on rolling something out? Anything around the rollout, or strategically what makes sense or what they should be considered if they're ever rolling out a similar product?
I think an executive team would probably already do this, but it's important to make sure that you have the holistic view of whatever the product is. So making sure that you have all of your teams dialed into how that product the workflow is,
Mhm.
as well as that's internal, but then you have your external. So we had our marketing team already working on a phased rollout for our construction assets. And so we had it in a phased rollout internally. We had all of our teams ready to go with training, and then we had our external phased rollout with our marketing. So I think making sure, and we didn't launch before we had all that ready. So
Is it important that when you think of a controlled rollout, what are some of the pitfalls that you can see happening if say you guys rolled it out to everybody all at once, starting on one day, hey, everybody can do this product in every single market, and there's, what would you expect could have happened if you would have rolled it out like that?
well, I think it goes back to that earlier question, right? Expectations. If it's all loose and messy, then that's a bad experience for a borrower. And as soon as a credit union starts losing reputational risk within a community, like don't go there, they told me this and then this happened, that's not good. And I don't think any of us want to run our businesses that way. So um, definitely making sure that you have the correct information for your salespeople is, like, I can't iterate that enough, I think.
Good channels for them to ask those questions in and find answers. You mentioned NPS scoring, and really, a powerful tool to establish a feedback loop. What do you think are other important metrics or KPIs when you think about construction lending?
Well, I think we also, so because a builder is not our end user or end member or the borrower, I like that we do get feedback from the draws on the land gorilla side. You guys, when they do a draw, they do give a feedback score, and I think that that's super helpful. So a KPI for a builder experience is also important. Um, that's something that I'd like to build out more here, but I think that's to be determined. That's when collaboration with your team.
Mhm.
So yeah, what do you think? What do you think is a good KPI from Land Gorilla side?
I think that there's quite a few, right? And I think that one of the biggest ones that always kind of hits you and everybody tends to focus on is the draw processing time. And for a lot of different reasons, when you start breaking it down by the various audiences, let's say we've got the construction lender, we've got the home builder, and we've got the borrower, right? For the construction lender, you being our client, it's a focus because it impacts net interest income, right? It can change the profitability of the loan. If you're processing draws every 2 weeks and not 2 days, there's a pretty significant 12-day difference that interest isn't being charged, right? And that could be substantial when you multiply it times the course of the loan and multiple draws times multiple loans, and you get into portfolio size, that's one that tends to stand out because it's a revenue center as well. I'd say, changing the audience or the persona, you get into the member, the borrower experience for them. They just want things to go smoothly. The last thing they want to hear is, hey, I'm having trouble, getting paid over here, and builders knocking on their door go, I'm going to go ahead and stop. Now that's a level of stress that nobody needs. And if you're processing draws pretty efficiently and everybody understands what's required at each stage, that's really important. And then for the builder, I think it's a huge selling point too. If you're waiting 2 weeks to get paid, BECU would be the last place that I would recommend if it takes a long time to get paid, or I'm having to jump through a bunch of hoops, or things are constantly changing. So I think probably like the biggest, most talked about KPI for me or historically has been draw processing time, because there's so many little details that go into that, from the inspection time to getting endorsements or title updates, collecting lien waivers or backup documentation, collection of e-signatures. A lot of things have to be happening sequentially or in sequence, like a really beautiful performance for them to come together to have a compressed time, right?
Right.
So that's a good one. I always love that, but the devil's in the details too. It's why is this taking 3 weeks? Well, it needs a final inspection. You don't have your occupancy. You got to wait for the occupancy to get your final inspection, and you didn't file your notice of completion on time, which extended the duration here. And titles, wanting to send somebody out to do a survey because the survey wasn't conducted at this time, and you're really close to the setback. I think a lot of fun things that can happen in construction lending, right? So
Well, and to that point, I think that that is one of the roles that I am here at BECU. So we have a pretty large custom construction builder here in the area who had a lot of their business go to a different financial institution. In their draw phase, though, it went to some sort of team on the East Coast, and they were having a really hard time having a person to ask a question to. And so that was a real big hang up for them to continue business with that financial institution, because they felt like they had great front end service, before the loan closed, they had a person, but then after the loan closed, they didn't have a person anymore. And so I've heard from builders that it's really nice to have a person to, hey, we we have a problem, or this happened, can you tell us more about it? Because it's all communication, right? I think that if you have any valid reason within that sequence of events that you just talked about, and you call and you say, hey, this happened, it's going to be this many more days, or hey, we're working to get this, a builder will understand. But it's only when it goes into silent mode and they call, or they can't reach someone, or they can't get an answer, that they get frustrated. I think most of the builders that we work with are very reasonable. They understand the nuances of lending a lot of money, and they understand, that we as a lender have to do the devil's in the details
mhm.
pieces to make sure that we are protecting our risk. And so they understand that, and they just like it that there's a person. So I think
Yeah,
that's one of the things that's a
time
win
zone
on this
covers
side.
support, right? The right people in the right time zone with the right experience. short wait times. I think that's that all of that's really important to keep your eye on. I think when we think of KPIs and, not necessarily in service levels too, um, you think about builder's risk tolerance, making sure everything's covered by builder's risk at certain dollar stage or certain thresholds. And, we've been doing a lot of work around risk scoring and algorithms of, hey, what's the probability that something's going to complete on time without issue, right? Where we defined issue as like a completion component. You know,
What
builder.
data points are you using for that?
Ooh, this is not about me, but yeah, we'll dive into that. I love talking about risk scoring. So, there's the completion risk. So you start thinking about, is this project going to complete on time? So, you get your X and Y axis and you kind of have the term of the loan, dollars over the term of the loan. You start thinking about, hey, if everything in a perfect world, we should be dispersing the X amount of dollars a day on this path, right? And it kind of gives you kind of some straight line.
So it's a formulaic forecast of if we're going at this disbursement rate for this period of time, then it will meet that expectation. Kind of.
More like credit scoring, right? Where this is a component of the score, right? You could lose. Think about it in losing points, right? Or getting points added, depending on if a good score is bad or a low score is good. But there needs to be some contributing factor if you're on progress, right? Are you slowly behind progress? Are you grossly above progress? Like, what are we really talking about? And so some sort of contributing factor to, is this going to complete on time? Are you on the happy path? We say.
So are you using inspection results percentage for that, or are you using the loan dispersed?
Ooh, even more complicated for that, right? We're using what we would consider to be direct costs. So first thing that we take from the budget is we try to label and extract all directly related costs
Right.
versus, say, indirect.
Versus the soft cost, which is like the profit or
Well, it depends. It'd be more like you'd want to get out your land acquisition, any contingencies, any interest reserves. Permits can be arguable. What I like to define direct costs are is the tangible, inspectable things, right? Um, because if we look at just the tangible, inspectable things, it's a great indicator of, are things getting done, right? When we look at architectural exhibits, or when we look at profit, overhead, supervision, builder's risk, some of the, call them soft costs, right? It doesn't necessarily mean things are getting done. We could be spending that money and things not getting done. So really focusing in on the direct costs, and then looking for behavioral patterns too is another one. Stalled progress, right? So periods of time where, hey, we're not drawing on anything. We're not inspecting the property either, right? Those are kind of contributing factors that should be raising some sort of attention. Hey, it's been 2 months and nobody's been out to the property, or we're not doing anything there. And the theory behind that one, I'll say theory, is that maybe it's not progressing. We should be inspecting it, but this is kind of an abnormal behavior. Although you do run across those builders where it's like, hey, yeah, I'm going to take two draws and be done. And yeah, you'll have stalled progress, which doesn't mean there shouldn't be cause for concern or an evaluation of the project during construction. I think some other ones that we think about there is builder's risk. That's kind of been the one that's evading us, is how to contribute builder's risk. And then I'll end on this one.
And when you say builder's risk, are you talking about just the insurance policy, or when you say builder's risk, like what
in,
is?
insurance not in place when it should be, and because you can get away without builder's risk for a period of time, right, before you get sticks in the air. The coverage is going to start going, is really when you're going to start going vertical. And there's a lot of pushback between getting it before the, hey, I'd love to have it before the loan closes, but that's, it's fine that it happens shortly thereafter. And you get some sort of policy in place, and depending on what the build is, as long as it's going to be completed under 12 months, then you don't have to deal with renewals. They can get a little bit costly.
Yeah, we require builder's risk to close our loan, so
Get it in place.
get it in place.
Doesn't hurt. You're going to complete in 12 months. It's going to be the same price, whether it's a 12 months or not 12 months, right? As long as it's under 12 months. The
But
other one,
even that piece takes education because it's on the borrower's side to obtain.
mhm,
Sometimes it's on the budget, so the builder will obtain prior to us closing. But a lot of times, consumers, a regular borrower, they're like, "Wait, I have to get an homeowner's insurance?" No, no, it's not homeowner's insurance. It's a different type of policy. So there's education even about that. Like, what is it? How does it work? What are the policy coverages that should be there? So there's another education piece. You get to educate folks about what builder's risk insurance is.
and they don't know. They don't do this all the time.
No,
Builder knows what it is. Borrower doesn't know what it is, but borrower's
exactly.
responsibility to get, yeah, the coaching is definitely an important component. And I'd say the last with risk scoring is around deposits or material funds that are done in advance, and being able to think about that, as like maybe a more traditional 10% deposit up front at closing that gets netted out in the first draw, um, is a
We've
lot.
seen a lot more, I think because of COVID, a lot more suppliers and subs just to get on their calendar or materials ordered requests. Just since COVID, I think that's been more of an industry norm.
Which is, how do you start to filter those out and still identify risk with the loan? If you're at the 75, 80%, of the term going through, you shouldn't have a whole lot of deposits still out.
No,
So if you think about it over
that's all
time,
done. Yeah.
uh, so it's probably one of the more interesting projects that we've been working on, is just how do you start building algorithms that identify those and start to tick at the score and do this, and then seeing the results and going, oh wow, this is high risk because look at this, or this is not high risk, going in reverse. So a lot of fun stuff around that, but not about risk scoring today. It's about BECU.
We can edit that part out.
Yeah, we can edit that. We'll fix it in post. We'll fix it in post. Um, Tell me about, what is there anything that makes the BECU custom, and I love custom construction loan program, like, unique? Anything in there that you think is like, hey, you're only going to get this over here?
Um, well, I really don't want to go into our loan qualifying details because it's all very specific to someone's scenario. But I think that we have done a really good job at making sure that um, we have a pretty flexible program for our borrowers. And, if you have land, we take that equity uh, and use it in your, appraised value. So there's there's a lot of good things about how our loan is structured. And then of course I think the flexibility on the draw side is another, the fact that we'll pay, deposit draw requests. We've gotten really good feedback from borrowers because a lot of times that is a question that their builder will ask. Hey, we've been asking for it. Will your bank do that?
Mhm.
And that's asked before they close, right? So I think that those specifics within our custom construction are important to make sure that we're meeting our market expectations. Um, and just as a whole, BECU, we are one of the things we do is we ask, is it in the best interest of our member when we kind of make policies and procedures? So a lot of our rates, our fee structure, our interest rates, we audit our rates against the market and make sure that we're really competitive, and then not charging any junk fees, zero junk fees. Like any fee that is charged is either it's a real fee that's incurred for the loan, and that's something that's been really important to BECU is having really low rates and fees for our membership.
Must be a clean CD.
It's pretty clean CD. I mean,
You're,
other than our construction CD has a little bit more stuff on it, just because that's just the way it is. But I mean, I can speak specifically. Like, for instance, let's say we just talked about inspections and draws. So, in a 12-month construction loan, we will collect for 12 inspections. You know how much they cost.
Yep.
So, we collect those on the CD. And our post close team, if that house gets done in 6 months, we credit back our borrower those extra six inspection fees that didn't get used.
That's great.
Not a lot of lenders do that. We do that. We audit at the end, and any fee that was charged that was not used, we give back to our borrower.
No, I love it. I love it. One of the things, God, I've been trying to weave this in, and I'm just going to call myself out on it. But we got to talk about this offline about a workshop that you created. And I would love to hear more about that. And I think our listeners would find it absolutely fascinating.
Well, just like we have a first time home buyer class, right? You learn about mortgages. We now have a custom construction workshop that we can co-brand with builders or real estate agents, um, to help with their market development. Um, and it speaks specifically to how a construction loan works, all the pieces that go into it, things to think about. What's really awesome is one of our financial educators, she recently went through a custom construction process herself. And so she was able to speak to like the questions she had along the way and create a really great presentation for our, I don't know, our members, our builders, anyone who wants to co-brand with us and have a class, we can do that.
That's pretty cool. Like
Mhm.
not only am I here up here on stage talking about it, but I actually went through the process myself. That's a cool story.
Yeah.
And what kind of feedback are you getting from builders on that? Are they kind of scratching their heads going, God, that's interesting, or like, heck yeah, let's do this.
Yeah, we've already done two classes with a builder here in the local market, and we got really good feedback from them as well as the participants who came. And we have another builder who already does their own. They did it during COVID. They had webinars, and so they've we're going to co-market with them. So it's exciting. Yeah, we have good traction uh, for this to be presented to audiences who want to learn more about custom construction and how to do it.
It seems like you guys are really relationship focused, and I even think you mentioned that at the beginning on just like building these relationships. You're playing. I keep thinking of like you're playing this long game. It's like, hey, we don't need to do something flashy today. We don't need to do everything all at once. We're playing this long game. Is that the right way to kind of think about it?
Did I use the analogy before we started recording about the slow burn, the fire? You gotta build your fire with all of the right little pieces. Because if you build it really fast and it's all the wrong stuff, when you light that fire, it's not gonna burn. So
It can,
yeah, we gotta get all the pieces stacked up right with the small pieces all correctly positioned. So when we light the flame, it's gonna burn nice and long.
and what would you say the stage of the fire is at today?
We have a really good small fire. We're still working on building it, so it's bigger.
Okay, all right. And what kind of advice would you give to a mortgage lender or a credit union that's out there today thinking, "Gosh, should we get into this? Should we not get into this?" Like, how are you thinking? You can even throw the economic outlook into there. Like, do you think it's a good time for somebody to do it, and should they even be considering this today?
Well, I think that you've probably heard the statistic that the inventory, we are, I think I'd read some sort of statistic that like every decade, 40s, 50s, 60s, 70s, we had built X amount of homes, right? And then the 2008 hit, 2010, and we stopped building homes. And so we've been in a place in our supply that there's just not enough homes being built.
Mhm.
So if there is a lender who is thinking, hey, what should we do to get more business if that's their goal? I think that a custom construction product makes sense, especially for states that are having a lot of, like we talked about, migration.
Mhm.
If you have influx into your state, I think that it makes sense.
Unlike California, where we got more people leaving than coming. But I live in California, and you don't have to worry about that. Yeah,
Yeah,
no.
we are not in California, so I don't have to worry about that.
And what are the states you're in? You're in Idaho.
We're in Washington, Idaho, and Oregon for this specific product. We do mortgage lending in other states, but for this particular product, that's our lending footprint.
Okay, what's the outlook on construction lending?
Oh, it looks good. I
It
think
looks
it just, yeah, just like I said. I mean, we have supply that needs to be built. We have consumers who definitely are moving to our state and buying land. We also offer a land loan. A lot of lenders don't offer a land loan. We have a land loan, so you can buy the land with BECU, do what you need to do to get all of your architectural plans developed, get your permit going, and then we can also provide the financing for to build it. So
now.
it looks good.
Now, if I got a land loan from BECU, I could technically refinance out of that with a construction loan.
Yeah, it gets paid off because we want to be in at first lien. We want to be in the first position, so that land loan gets paid off. Yep.
That's a kicker, right? That's hey, we found the right spot. We got the builder. It's always hard to kind of put it together in the same transaction, but doing the 1-2 punch is pretty powerful.
Yep.
Now, we've been going for a while here, and if you've listened to the podcast before, we get to the end on the rapid fire session, which I absolutely love. Some people think it's a little different, but it keeps you on your toes. And if you're ready, we'll go ahead and start firing at you.
All right, let's go for it.
Would you ever build your own home with a construction loan?
Yes, I would.
Why?
Well, I've already almost done it. I did a studs out remodel, and I love visioning space, and I would totally build my own house. I think that it's a really fun creative process to have a concept in your mind of what you want and then see it come out on the other side. Super cool.
Wow, that's cool. All right, ready for the last question?
Yep.
If you could change one thing about construction lending, and it could be a regulation, it could be whatever you want it to be, what would you change?
Um, hmm. There are so many topics to talk about there. I wish the permitting process were easier for people. Um, there are so many overlays within a permitting process that add time, and then it's really hard to like forecast depending on the jurisdiction how long it's going to take, and then what could be added at a particular point in time because someone else reviewed the plans and now they're like, oh, and now we need this. So I wish the permitting process were easier for whoever the end user, the borrower, the builder, the person building the house. It's just it's really hard. Permitting is really hard.
Yeah, my anxiety level as you're talking about that is just starting to go through the roof, and all these like just feelings and situations, and that's a whole different podcast in itself. That's a great
Yeah,
idea.
and it's not the same with every jurisdiction. It's not the same in every state. It's not, and that's the part that's difficult is you can't speak to every situation because they're all so different.
We went to a local housing event here in San Luis Obispo, California, a few years ago now, and I want to say it was put on the Home Builders Association or some nonprofit, and they just brought in different stakeholders. And one of the sessions was they had two different cities, the city of San Luis Obispo and the city of Santa Maria, get up there. And I think there was another, it was like the city of Paso Robles or something up there.
I would say a Atascadero or Paso Robles.
Yeah. And maybe it was a Tascadero, but the moderator got up there and asked them similar questions about the permitting process, what you guys do differently, mentality. And one of the people that was up there for Santa Maria had also worked in San Luis Obispo. So we got some perspective from one person what it was like. And I just remember them, it was like the tale of two cities. One city was here to help, the other city was not here to help. was to make it difficult, and I was just always shocked to hear them like saying the quiet part out loud. Like that's what it felt like being in the moment. And to know that there's some areas where you could just go in and get a permit over the counter and walk away and you pay your $400 or $300. I think the national average is $1,200 for a permit. And then there's cities that you show up to and it's your total will be $104,000 for the building permit. It's like, whoa. And it's going to be 9 months.
Mhm.
What? Where are we going wrong here? But that is probably a podcast in itself.
It is, for sure.
Well, thank you so much. I really enjoyed this time and all of our conversations that led up to this. And, for our listeners missed out on so much, but this was fantastic. Love to have you back on again. And thank you so much for joining us today.
Well, thank you for having me. It was really good to be here. Great questions and good dialogue. So thank you, Sean.
Yeah, now, if people want to get in touch with you and reach out and ask questions, or, you got a credit union in Florida that's just dying to ask you something, what's the best way for them to get a hold of you?
They could email me, sarah.bender@becu.org. But I would also say that the mastermind time that we have with Land Gorilla with other credit unions, I think it's been invaluable for that type of resource. So definitely join the mastermind call.
Yeah, well, here, and many of our listeners probably don't know what you're talking about for masterminds. Tell them about masterminds. We'll give it a little plug.
Oh, we'll give it a little plug. I feel like it's quarterly. Mm, is it quarterly? It's probably quarterly.
Yeah.
It is just a time of credit union leadership who have a custom construction product, talk about kind of their best practices, how are they dealing with issues that they're seeing in their markets. It's kind of a forum to ask questions and to find out, how other credit unions are dealing with their specifics. And it's been really helpful, I think, for us to hear, you know, when we were first launching, it was interesting to be on the call and hear what other credit unions were having the most difficulty with, and then to fast forward, 2 years later and be like, "Yep, I know what they're talking about now." So, you know.
I get stopped and asked about masterminds all the time. And there's one for credit unions, there's one for community banks, mortgage lenders, private money lenders that they do each quarter. And I just hear some great things that just I've never attended one myself, but I just hear the really great conversation. Really great conversation. Too bad it's not like a happy hour to have masterminds.
Right.
That's the next
Virtual.
level.
I guess we could do it in the afternoon and have our beverage of choice.
Yeah. Well, thank you so much for being on the podcast.
Thanks for having me, Sean.
All right. You have a great day.
You too.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.